Greetings everyone, welcome to our channel. Electric car maker and energy storage company Tesla is now part of the S&P 500 index, joining the likes of tech giants Apple, Microsoft, Amazon, Facebook, and Alphabet as the fifth most valuable company in the index. Tesla CEO and co-founder Elon Musk took the opportunity to thank supporters for making the company successful, saying, "Thanks to everyone who worked so hard to make Tesla successful. My heart goes out to you." The electric car maker has enjoyed a skyrocketing share price in 2020 despite the economic pressures placed by the coronavirus pandemic. Share values soared 64% after the confirmation it would join the S&P 500 index in November and are up almost 700% since the start of 2020. In this video, we are going to tell you how joining the S&P 500 will affect Tesla in 2021. The electric car maker will be the biggest addition in the history of the benchmark index. Will that settle down its swings? Sit back, take a brew, and enjoy the video. The stock market. The stock market has never seen anything quite like Tesla. Led by the mercurial celebrity billionaire Elon Musk, the electric car maker's shares have soared roughly 14,000% since it went public a decade ago. Even amid an economy-roiling pandemic, it's up roughly 700% this year, and now a company that has provoked years of equally intense fandom and criticism among money managers and tech bros the world over is being added to the S&P 500, traditionally a marker of corporate maturity. In this too, the stock market has never seen anything like Tesla. The company will be the largest ever added to the index, and with a market capitalization of $650 billion, the sudden weight it will throw into the market could have strange consequences. The S&P 500 contains 500 of the most important companies operating in America. A common misconception is that the index simply contains the 500 biggest U.S. companies by market cap. This isn't true. There are other criteria companies have to meet before joining the index. This led some people to wonder why Tesla wasn't already included, as they were already bigger than a lot of companies within the S&P 500. Steve Sosnick, chief strategist at Interactive Brokers in Greenwich, Connecticut, said, "This is by far the biggest index inclusion that they've ever attempted. The stock will immediately be a top 10 name in the S&P, which is nuts." Who decided on the Tesla S&P 500 edition? Companies joining the S&P 500 have to be approved by a committee. When the Tesla share price was skyrocketing earlier this year, many were wrongly presuming their addition would be automatic. Even though Tesla shares increased in popularity, leading to a higher market capitalization, they still needed approval. There were concerns in the past over Tesla's financials, which were preventing their inclusion. Tesla invests heavily in research and development. This is expensive work, and it gave them a high price-to-earnings ratio compared to competitors. Also, their revenue streams are quite complex and aren't just based on car sales. Now that they've been approved, inclusion in the S&P 500 will make Tesla the most valuable company ever to be added to the index. Where does Tesla stand right now? Companies worth a fraction of Tesla would have been included in the index long ago, but the approach that made it such a valuable company has brought challenges. Despite all its technological innovations, Mr. Musk's celebrity billionaire aura, and a high-risk, high-reward approach to business, Tesla for the longest time was unable to meet the most humdrum requirement of corporate America: turning a profit. Criteria for inclusion require the sum of the company's fully audited profits in the 4 most recent quarters to be positive. Tesla hit that mark only this year. Tesla was never short on ambition, though. From the beginning, it proposed to compete directly with the world's biggest automakers by slowly rolling out a lineup of all-electric vehicles at a time the technology seemed impractical. General Motors' electric EV1 had gone the way of the dinosaur a decade earlier, and Tesla's plan seemed wildly unrealistic for a startup that wanted to compete with Detroit. But the messianic mystique of Mr. Musk, a chief executive hype man in the vein of Apple Steve Jobs, was alluring. He sold a vision that gave Tesla an endless appetite for investor cash, and pockets both deep and shallow bought it. Over the years, the company pulled in capital from venture capitalists, bond markets, and stock investors, and inspired a wave of casual investors once it went public. Sales: 140,000 cars. That's huge, right? Another reason for investor enthusiasm is that Tesla is proving really good at selling automobiles, delivering almost 140,000 units in the third quarter. This is an increase of about 45% year over year and puts Tesla within reach of its goal of delivering 500,000 cars in 2020. While the rate of growth in deliverables is admirable, Tesla still trails far behind its rivals. Toyota, for instance, sold almost 11 million cars in 2019. Still, investors are hopeful for many more years of amazing growth. Index weighting: 1%. Tesla may be among the hottest stocks on the market, and it will most likely be the biggest company added to the S&P 500, but it's still just one of the 500 companies listed in the benchmark index. In fact, Tesla will only comprise slightly more than 1% of the S&P 500 and nearly 10% of the consumer discretionary sector, according to Silverblatt. Tesla may not even be one of the top 10 constituents of the S&P 500 by index weighting once it comes on board. For context, the number one S&P 500 constituent, Apple Incorporated, makes up 6.5% of the index. For ETF and index fund holders, this means that while you gain some exposure to the automaker, you aren't likely to see moves in the shares of Tesla significantly impact your portfolio's performance. Instead, Tesla will complement the shares of the 499 other companies included in the S&P 500, helping to provide the kind of long-term diversified growth funds are known for. There's no word yet on what company Tesla will replace in the index. Effect on Tesla share price. It's been an extremely positive year for the Tesla share price. They've been a standout success amongst U.S. shares, propelling Elon Musk to become one of the world's richest people. Tesla's inclusion in the S&P 500 is definitely not a negative. However, it is likely that this news has already been priced into their current share price. In the long term, joining the S&P 500 is good because a portion of investments in this popular index will now be directed toward Tesla. There are some concerns that the company is currently overvalued, so being included in the S&P 500 doesn't necessarily mean more short-term growth for Tesla. This news does pave the way for Tesla to keep expanding and developing. The future could be even brighter for this ambitious company. Tesla is Tesla at the end of the day. While the recent Apple electric car news may yet prove to be another ripple in the historical pond of whispers that the tech giant will enter the electric and autonomous car market, legacy car makers are definitely ramping up efforts with huge investment in the transition to electric mobility. However, Tesla's continued success, overvalued or not, rests squarely on its ability to continue innovating, which it has done in droves since it entered the market with the Roadster in 2008. It can't be underlined enough that Tesla is not solely an automaker. It is a software technology and automotive design disruptor, and a renewable energy company, as a list of its past achievements and future plans demonstrate. Tesla's plans for 2021 and beyond are equally ambitious. To start with, it will produce the Model Y in Berlin and Shanghai using giant casting machines. By mid-2021, Tesla will start building the Cybertruck at its factory in Austin, Texas, and Musk has hinted that by 2023 there will be another, smaller Tesla electric car that will cost $25,000 US. That's not even including the wide release of Tesla's full self-driving software, the introduction of which may further increase uptake, particularly as it becomes available as a subscription product from early 2021 and which would provide Tesla with bigger profit margins. Bottom line, the electric car maker will be by far the largest firm by market value ever to join the S&P, the most widely tracked stock index. Tesla's inclusion will prompt the dozens of index funds that track the S&P to seek to purchase tens of billions of dollars of stock at Friday's closing price, in a bid to track the index as closely as possible. Because of the firm's size and the volatility of its shares, Tesla's addition may ripple through the market in additional unpredictable ways. What are your thoughts about Tesla joining the S&P 500? Do you think it will affect Tesla positively or not? Let us know in the comments section below. It should be another fascinating year in 2021. Don't forget to like this video and subscribe to our channel. Also, hit the bell icon button so that you'll get a notification whenever we post a new video.